Rene, how is the landscape in China shaping up for the fund management industry as the regulations here change, as those barriers are lowered by the Chinese authorities?
Well, I think we are very excited about the developments that we already observe domestically. I give you a few numbers just to demonstrate that. If you look at Chinese household assets, which are rising rapidly, today only 14% are actually held in fund management type of vehicles that asset managers are managing. Pension money, less than 60% of the assets are managed by asset management professionals. So the changes that you have seen with the financial sector reform, which are aimed at RMB internationalization, it's around opening up domestic capital markets to international investors. You see the pension reforms that are aimed at bringing more modernization to the platforms. These all will drive significant growth in the asset management from our perspective. We believe institutional assets may probably double in foreseeable future, and in the retail space, our forecast is around 10-11% annual growth in the fund management industry.
So significant growth, and you got your license last year for
Correct.
the private securities fund,
Yes.
which you then launched towards the end of the year. What are you seeing in terms of inflows? What are you seeing in terms of how that fund is shaping up for 2018?
I mean, if you look at our overall China strategy, we have three goals. For international investors to understand China better and help them to allocate more money to China. And I can tell you on my trips to Europe or the US for that matter, there is still a lot of education about the Chinese domestic developments necessary. The second one is help Chinese domestic investors to go global. As markets open up, they need to understand better where and how to diversify. And then the third one, and that's where our license is obviously super relevant, we want to bring a new value proposition to domestic Chinese investors in China, bring international risk standards, international investment practices to the market, and I complement basically what's already available today in the industry here. So we see a lot of demand, interest, early days, obviously, but as our CEO often will say, we are in China for the long term, so I guess that's where we are right now.
How would you characterize the competitive landscape in China when it comes to the fund management industry? Because there are numerous local domestic funds, very aggressive. We've spoken to the likes of Merchants Bank, for example. They told us last year they wanted to take on UBS. How do you compete with those local players? How do you distinguish yourselves?
If you look at how Chinese investors today allocate money, it's very much still in very plain vanilla products. So you see traditional money market funds, you see some fixed income allocation. Where we see a new trend coming is certainly multi-asset, balanced solutions. And as we see a gradual opening of offshore markets to the onshore markets, I think there will be more and more solution type of offerings. That's clearly a strength that international managers can bring to the table. So for me, it's not so much about how do I compete, it's how do I complement the offering that Chinese investors have today going forward.
And in terms of the headcount then here for UBS in China, you're adding to headcount. You had an ambition to double headcount within 5 years by 2020. How far along are you in making progress on that?
So we're on track on hiring, and certainly for our WUFI here domestically, for example, we added compliance, risk people, we had operations people, we added domestic portfolio managers, we are adding to the distribution. So it's all around bringing our value proposition now domestic alive. So we're very well on progress and on track on these hirings at the moment.
And you're continuing to invest in China to expand that footprint?
Oh, absolutely. So from our perspective, we highlighted these trends in China. It's not just about how fast we grow domestically, it's also building more knowledge onshore to bring global, right? And I cannot stress this enough. A lot of the international investors are starting to get interested, but to give you an example, for the first time in my 14 years here in Asia, actually I have even Japanese investors starting to invest in China equity and are interested in RMB fixed income offerings, because the yield is significantly higher what they can get in their domestic market. The RMB as a currency is much more stable, predictable against an international currency basket. So we believe there will be significant inflows in this region coming from international investors. Domestic expansion is important, but we are very conscious that that's a mid to long-term strategic goal.
And when you talk to those international investors, what do you tell them about the A-share market? What do you tell them about the opportunities? What sectors would you advise them to look at?
I think that the latest 5-year plan of the policymakers gives here fantastic clues, right? We see a lot of interest in the consumer-led stories. So we like healthcare, we like internet, we like anything technology. The topic obviously of the conference here is from factory to laboratory, so the whole research and development opportunities that are bringing new renewable energies, self-driven cars. There are just plenty of opportunities, and as global investors look for alpha opportunities, I think emerging markets and China in particular is just a fantastic place to start looking for.
More broadly, in the APEC region, which is, of course falls under your remit, where are you seeing the opportunities and challenges there beyond China?
I mean, we're in general positive on the region because as affluent wealth is increasing in the region, you will actually see also demand rising for asset management products across the region, right? Because there is more money in pension, insurance, and the likes. So we're very positive on emerging markets and emerging Asia as a whole. If we look at from an equity allocation, obviously, I give you here a consensus view of the street. We're very risk on, so we like emerging markets and emerging Asia in particular, and hence there are plenty of opportunities across the region at this stage.